Hello. Welcome to the live stream. How you guys doing today? Very good. I don't really care. Okay, so what are we doing today? Like, we got to talk about Bitcoin. We got to do the live stream idea. And against my better judgment, we have announced this live stream to literally fucking 4chan. So we're going to answer any of their burning questions that just so happen might surface on this motherfucker. I know. Well, let's just get right to it, okay? Okay. Oh, I need to record the trading view idea. Just give me 1 second. Hey folks, to start off, we're gonna do a daily update on Bitcoin. So, let's do the macro to micro analysis from the top down. First, we need to pop over to the weekly chart, just so that we still understand we are testing the same benchmarks we have been testing, right? It is important to note that the weekly 200 moving average has and will act as support for the remainder of the year, right? We have the test once, we have the test twice, and then we're going to test it a few more times through some nice bouncing price action over the remaining of the year. I'm guessing about 240 days, right? Probably something like that, just so that this nice big distribution up here can compress around price, right? Because force equals mass times acceleration. Mass is the width of the distribution. If you have a distribution with significant mass, what's going to happen? It is going to require significant force to move. So, because we have this downward expansion and remnants of volatility overhead from the previous upward overexpansion, right? This new compression that we're getting here is a healthy symptom of the end of a crash pattern, right? Because a crash pattern is signified as over when you see a period of reduced volume, reduced price volatility, and the compression of all distributional periods to allow there to be significant potential energy for the new expansion of a new bull run, okay? It's beautiful. Now, if we pop ourselves down to the daily chart, looks like we're still getting the compression of our short-term distributions, so that's fine. Really, I'm just going to predict that we're not going to see any of expansion of our short-term distributions whatsoever. These subsequent moves are actually going just to be pitter-pattering along there at the bottom, right on top of that weekly 200, all right? And then our longest overexpanded distribution on the daily chart is the 250 band. So if we are looking at the 250 band as the definition of trend, right, we are still technically in a state of downward expansion as defined by this beautiful daily chart, right? So as long as this pivot, or as long as we're getting price below said pivot, right, that actually defines trend downward fashion. A downward defined trend, well, we all know what that means. Anybody knows what a downward trend means. However, as soon as we do break inside that pivot there, and we do cross inside, we are going to see lateral mean reversion, where this 250 moving average is going to move down and meet price. And it is important to note that if we actually do see the expansion of our midterm distribution up here, right? So if price actually does break up here, we will see trending mean reversion to price instead of lateral mean reversion, right? Two kinds of mean reversion, where price can travel up to meet the mean, or the mean can travel down to meet price, okay? As soon as that condition is fulfilled as the state of not trending, right? Because we are in a state of trend, and with a state of trend, we still get the risk of further downward expansion. However, once we actually cross the pivot of the 1.25 standard deviation of the longest overexpanded period, mean reversion will be implied, and then we'll have to see if that's through a lateral move or a trending move. If you actually take a look at the previous crash pattern, you will notice that it actually ends up being lateral mean reversion over trending, okay? We're going to need to zoom out and take a look at the previous crash pattern, and this will take just a second. Not that 3D Wave PM makes the load time any faster. A little bit further. Beautiful. Okay. In this particular example, where the downward expansion is taking place, the longest overexpanded period was the 200. So let's change that back. Okay? Because when you are compressing, as defined by the longest over expanded period, guess what you receive? Compression as defined by that period and lateral trading as defined by that period. So you'll notice as soon as we actually did cross that mean reversion pivot, price traded laterally and the mean traveled down to meet price. As soon as we removed all volatility overhead from this equation and we saw this beautiful compression where everything is nice and tight, that next upward expansion results in significant sustainable trend. Okay? Let's take a look at the 4 hours just so we can actually define trend in a shorter time frame, right? Because we're actually getting converse expansion as to what is currently defined by the daily chart. And look at this new piece of mass right here. Yes, and I did phrase that the way I wanted to. Looks like the longest over expanded period is the 60. Let's actually go to the 1 hour chart to get a higher resolution picture of what that's going to be. In other words, we're going to look at the 240 on the 1 hour chart instead of the 60 on the 4 hour chart, right? So if you just go to a shorter time frame, you just have to multiply that value by 4. And well, that's what's so beautiful about mass readings, is they're universal across all time frames because they adapt to which time frame you're looking at. Okay? And in fact, it's actually closer to the 260, and this is exactly why we've gone to the lower resolution on the shorter time frame. It's actually looking to be 275 as our exact period. So we're going to do the 275 period as the span to define our upward trend. As long as we're above this pivot, we are in a state of trend, which means we'll get sustainable trending. Okay? So this purple band is very clearly a defining trend for Bitcoin. The moment, the absolute moment we return inside this band, price will revert to the relative mean, like clockwork. This happens around with 90% accuracy, and I'm not just saying that, right? If you want to trade nothing but mean reversions, you'll do very well for yourself, right? Here was the last time that signal was met, where our longest overexpanded period was 200, and we went inside the 200 band. So like clockwork, price reverted to the 200 mean. Just a single move, right? That's what mean reversion does. Every time you re-enter an overexpanded period, you go to its relative mean. It is almost bizarre how accurate mean reversions can eventually be. And really, that's what I'm looking for right now. As long as we're above this pivot, we are technically in bullish territory. Yeah, it's a clean chart. That's really all I have for you guys, at least on Bitcoin. I guess we could talk about potentially trying to find entry into this, right? If you want to enter like directly on top of the band, that's going to be your best bet, I'm saying. That's real tight stop loss there. If we actually look at the previous overexpansion from the previous run, and let's load up the adaptive MA real quick. Right, because last time we got this upward expansion, right through here, it was actually that period that defined a trend perfectly. So that's actually probably what I'm going to predict is going to happen. Right, as long as that mean reversion pivot isn't crossed, we're going to get that sustainable trend. And just give it 1 second to load. Mean reversion MA is a massive indicator. It pushes the limits of what is possible with TradingView. Okay? You'll notice the trend was clearly defined by the longest overexpanded period, right? And the adaptive MA adjusted to match that period. And the moment it turned inside, we had a huge red candle where price eventually found support on the mean. And guess what happens when the mean breaks? Another huge red candle, right? You can't tell me this isn't an institutional benchmark. Oh, and we'll just point this out, because why not? Mean reversion. Mean reversion. Like, if you want to trade nothing but mean reversions, be my guest. Mean reversion. Mean reversion. You will be hard-pressed to find an example of this chart in the last year that has failed. mean reversion. And, you know, we could just spend like the last minute of this trading view idea just continuously drawing out these mean reversions, but I think I've made my point clear. Right, let's look at the current overexpansion for Bitcoin right there. Beautiful. Trend will be defined by that longest overexpanded period. The second we return inside, we will have that mean reversion. Okay? It's a beautiful chart. It has been a pleasure, and I'll talk to you guys later. Very nice, guys. Okay, is the audio better on 1? Or is the audio better on 2? Tell me your thoughts. Hi, Rich. Hi, Great Days. Great Days has been getting better. Yeah, I'm getting better. It's good. You know, I have this really bad thing when I'm sick is where I get insomnia and I stay up. Not of my own volition, of course, but rather I'm just kind of forced to stay up. And the most important thing for you is sleep when you're sick. Just to go to sleep when I was tired the other night at 9:30, and I slept from 9:30 to 2 a.m., and then I woke up at 2 ready for the day. And I'm like, well, this is hardly any better. This is 2, right? This is 2 right here. And this is 1 back here. The first ASMR crypto. Apparently, that gets me a lot of attention. We had a 75% increase of views in yesterday's live stream. Probably because of the clickbait title, but... Okay, let's just type this in. And at the live stream time, right? Oh, I can't actually see what time in the live stream I'm at. Who the fuck does that? Okay, so I can't timestamp it for them, but oh well. Bart drop down, easy TA. Now, bro, I just drew out the mean reversion pivots for you. Relax. Okay, I'm just gonna do these in the order they come down. Let's do ARK. And this on it, wow. Okay, let's do ARK. You know what? I can fuck with this. This is net expansion on the daily. This is a period of accumulation followed by net expansion. This is significant. Do you see how tight this 200 band is on the fucking daily? Hey, let's just draw this out for you again, okay? Force equals mass times acceleration. Look at how little mass there is. Everything is blue or green. So when you apply significant force to something with a little mass, it's like hitting a home run, right? You know, usually you get these huge volume spikes, and then you get, it's like swinging a bat at a bowling ball, right? I don't care if you've got Mickey Mantle at the plate. He's going to have a hard time hitting that bowling ball farther than a few feet, right? That's usually what volume spikes look like in crypto. But rarely do you see this kind of lateral trading for extended period and the compression of every fucking distribution. Okay, this is significant. Okay, that means this is a sustainable breakout. Okay, if we're looking at the 4-hour chart, all right, let's just get this in our heads. This is in a very significant defined state of trend, okay? This is beautiful, defined state of trend, okay? However, it is important to note we are tagging the 3.2 standard deviation. As soon as we get a red candle close inside the 3.2 standard deviation, retracement to the 50 moving average will be implied. Okay? So, if you want to play with this, you're going to have to do so on like the 3-minute chart. All right, that's probably going to be your best bet for a bit. Let me twist this down a little bit. How's that? Is that better? Okay. So, red candle close in the 4 hour through the 3.2 standard deviation. Will result in reversion to the 50 mean. If you want to look for a fucking retracement, okay, right now our longest over expanded period is 140. This is constantly going to change, guys, right? With new net expansion, we get the higher over expansion of our longest period. So if we switch that to 140, yeah, that's pretty clear definition as well. Let's actually go to the 1 hour chart so we can take a look at the previous mean reversion just to see how this behaved so we can compare it to present predictions. If anybody wants to tell me what 140 times 4 is, that's what the longest over expanded period is going to be. Okay, nice. We got a lot of volatility overhead here on the shorter time frames because of just the amount of force actually going into this. We're looking at the 250 period. Okay. So how much do you bet if I draw on a 250 moving average? That's going to be the exact retracement value of the mean. Would you fucking look at that? Okay. 250 period is the longest over expanded period. When you re-enter the 250 band, price reverts to the 250 mean before trend continuation. Fuck me. Like, sign was there. You could have caught entry here or here. Okay. I never want to sleep again. I just want to sit at charts. Sit and look at charts all day. You're going to get a shit ton of high price volatility here. Again, either wait for the retracement value to the longest over expanded of the most recent period or the mean itself. Okay? Those are going to be your best profit ratio trades in ARK. Okay? I do believe that this, because of the next expansion on the daily chart, that we're actually going to get long-term sustainable trending. Or, I should clarify, long-term for me is like 2 weeks. Okay? Kind of like what we saw with BNB, right? Okay, I should actually look at people's charts. Hold on. This is the biggest bait and switch. Ooh. I would probably open my like reaction image folder to post for this boy, but I don't know. We're getting into risky territory going through my files. Actually, if anybody wants to be like a fucking custodian for me and link what time in the live stream I do each coin that I review here and post it as a reply to that person, you would do me the biggest favor. Right? Okay, like just timestamp where I began to do the ARK trade, the ARK TA, and then go ahead and fucking reply to Mr. ARK over here, right? GoPro. Yeah, that's fun. Okay, before I dive into the security, please note that nothing I say is financial advice. You probably shouldn't be listening to me anyway. Okay, G Pro. Yeah, I've heard GoPro's been doing pretty well recently. Ah. Okay, I suppose this is what people consider good in the stock market right now, but Dominic says, what's with all the cursing today? Okay, I'm sorry. Yeah, I should stop. My apologies. You are absolutely right. I shouldn't have been doing that. Okay, let's figure this out. We need to look at the, what period is that? Okay, yeah, we have implied mean reversion. So, if we have implied mean reversion to the 160 moving average, all we need is the signal to actually trade that, right? So because we have re-entered the 160 band and the 160 is the longest overexpanded period, we want to wait for a 1/10 of that period CCI roll. So that means we need a 16 period CCI, right? You can do this yourself. Go on the daily chart, load up a 16 period CCI. Okay. When that 16 period CCI dips below, it could actually just plow straight to that mean and you might not get an entry. Okay. However, if you were to just enter the long position right now, your profit ratio would be shit, right? It would be 10% upside and a 10% downside. You don't want a 1-to-1 profit ratio, right? So even though we have a condition that's predictable here, you want to wait for that CCI roll, otherwise you're going to fuck yourself. Okay, it's a bullish chart. We can actually define upward expansion on a lower time frame too. That's what's going to be fun about this. Ready? Okay, we're going to define upward expansion to see if we have any mean reversion pivots down here. It's so small, but it's there. 70 period. And it looks like we actually just reverted to that 70 mean. Right, if I change this to the 70 moving average, you'll actually notice that the mean reversion already completed. Watch this. Oh my god. It's just too clean. Ready for this? Okay, look at this section here. For this brief period of overexpansion, look at how cleanly this defines trend. And the rejection from the 3.2 standard clean. Okay, next chart. Actually, this is a nice GoPro chart. Again, either look for that CCI roll-up or at least a mean reversion to that longest overexpanded period. Whew, we might be able to buy into some trend continuation here. This is nice. I like this. Okay. Okay, we need to start from the top down, though. Switch this back to our default settings and get to work. Okay. Of course, we need to look at the daily. We have a defined trend for the longest overexpanded period of 60. Actually, no. Hold on. I'm glad I came up here for a second. Longest overexpanded period is 70 again. Shit, I didn't need to change the 70 period. Now I'm annoyed. Okay. Let me just type out this rule for you guys, okay? Because this is really important. While undergoing mean reversion, price will trade laterally as defined by the 1.25 standard deviation of that longest overexpanded period. Okay, so what does this mean? So if the 70 period is the longest overexpanded period, like that we have drawn out here, right, where the red plume of mass is defined as 70 is the longest, when we re-enter the 70 band, oh, I didn't finish this. I need to change something. Until that period's distributional width reading is defined below the 0.7 value, okay? So what does this mean? When we re-enter this mean reversion pivot, it is implied that we will revert down to the 70 moving average, and that as long as this 70 period is not marking green, right? As soon as it turns green, that means it's below the 7 value. Right? As long as it's not green, price will trade laterally as defined by that period. So that means we will test the top edge of the band, and we can test the bottom edge of the band, or we can just stay inside while this compresses down around price. Okay? And I'm going to put this on my clipboard because I like it. I'm going to save that somewhere. So you'll notice that we're getting repeated wicks testing up, touching the top edge of that band, because it would require an unrealistic amount of force to move something with an unrealistic amount of mass. Okay? So really, unfortunately, this compression is going to happen for quite some time. And we can actually notice it over here as well, right? Where we re-enter the band compresses and trend doesn't continue until that period is green, which only happened until this location right here. Do you see that? Do you see where trend begins? Right there. Trend begins right there as soon as it goes down below the points of value. Tell me that's coincidence. Okay, so I need to wait for the same thing, where this volatility overhead needs to radiate upwards to the 70 period. Then we can actually get trend continuation. But right now, we're going to see some lateral trading, and I just expect us to not break the top edge of this resistance line for at least, I would say, until at least March. Now, given the FOMO associated with Link, the amount of buying pressure associated with this could actually be what was I saying? Where was my train of thought? Okay, yeah. Even though this has unrealistic amount of mass, because of the nature of Link and how FOMO oriented it is, we could actually see unrealistic amount of force, right? So with this kind of analysis, you still need to realize that this is simply what is most probable for that scenario, okay? So I guess I do owe you taking a look at the uptrend down here. We'll define the longest overexpanded period on this chart. I can tell you right now it's 100, just from looking at regular wave PM. So I'm actually going to define this retracement value for trend reentry, okay? Actually, if the connected plume is only around 50, and then we're just getting that result from volatility overhead. Okay, that's interesting. So the connected plume is actually around 60. So trend retracement to the 60 MA has been completed, and now we're getting high price volatility at the key pivot. Wow. Okay. Yeah, you actually have a pretty good profit ratio here. Let's draw this out for you. We need to have a stop loss below that lowest wick, and your take profit is going to be the top edge, that 100 or that 70, 60 band. Okay. Yeah, that wouldn't be unreasonable. The hard thing about retracement trading with this kind of analysis is everybody's looking at this trend line right now. Okay, and it's actually pretty likely that we're going to see this bottom edge of this overexpanded distribution curl up. And I would not be surprised if that's actually the level we retest from. And again, I do not believe long-term trend is even viable. So I would actually ignore this trade altogether. Right, because if we're betting on trend continuation, but trend continuation is implied to fail based on the compressing longer period on the daily chart, well then betting on the upward trend to continue is questionable, and you would have a much higher probability of that trade succeeding from the bottom edge of this band. Awesome. Yeah. Sure, and can you tell a TA noob what indicators you're using and where to learn more about them? Okay. The indicators are paid. I sell them. They are made by my developer. It is important to note that you can do everything I do for free. Okay? I very much recommend you read Macro to Micro by Mark Whistler and Volatility Illuminated by Mark Whistler. Right? We have developed these tools simply based on the concepts in those books. Simple as that. So I just need to go over this real quick. And you can also find out, if you want to learn more about the indicators, there is a playlist on our YouTube channel that it's about 2 hours of content just explaining what all these indicators are. And I'll just do a quick run over. These are Bollinger Bands, right? A Bollinger Band is just a bell curve. CCI is a mean absolute deviation representation of a Bollinger Band. Okay? So think about it like this. The 100 value is the top edge of the 1.25 standard deviation. The negative 100 value is the bottom edge of the 1.25 standard deviation. Okay, why the 1.25 standard deviation? Because it is the empirical constant for the expansion or compression of a distribution. All right. Wave PM, this guy right here, is a Boutique oscillator that simply measures distributional width, how wide the Bollinger Band is. Okay, so this is the 70 period. If I had a 70 period wave PM right now, if the band was getting wider, the value would increase. If the band was getting thinner, the value would decrease. Anything above the 0.9 value is considered critical mass, or rather, it would take an unrealistic amount of force to continue expanding it. 3D wave PM is an adaptation of wave PM, where it takes 32 separate readings of distributional width, and instead of labeling it as an, or rather rendering it as an oscillator, it renders it as a heat map, okay? And if you look into the live chat, you can take a look at Penn. He just dropped the link for the video playlist on how these indicators work. I am a lazy bish, and you may thank me for nothing. I skipped nulls. Okay, I'll do nulls for you. Am I using the light version of Bollinger Band Meomics? I am, okay. Still doesn't have the load time. This chart's pretty choppy. Okay, it's interesting to note this short-term compression here. We can get significant trend up to the 80 period from the looks of it. Okay, this would be the best way to define this, right? Our longest overexpanded period is 160. So price will trade laterally as defined by the 160 period until it reads below the 0.7 value. And let's take a look what that looks like. Wow, that it's just so clean. Like, look at this. How we get rejections from the top edge of the band repeatedly, repeatedly, repeatedly. And, you know, if you want to set some buy orders right there in the bottom edge of this band, my God, that would treat you so well. Let's check what the profit ratio on that is. Right, because if we can predict the size of this lateral range, it's 15%. Yeah, you have a really good profit ratio on this kind of trade. It's just whether or not your entry will actually hit. So something like that would be our best scenario. I'm not predicting that it will go down to that value. But if it does go down to that value, my God, you're going to have such a high profit ratio trade. I'm going to set an alert for that, and I will call that if I hit that value right there. Also, I remember I'm going to do something for Penn real quick. I'm going to talk about BAT, right? Because I called BAT yesterday, or 2 days ago, right here. And you were a little confused as to why I called it. And I'm actually going to go over this chart. Right, and from the looks of it, this chart did pretty good. We just hit second target today. And let's actually talk about why. Okay, why did I do this the way I did it? Because you get lateral trading as defined by the longest overexpanded period. Simple as that. Right, we had this downward expansion. Longest overexpanded period was 200. So, if we cross this pivot, is implied we revert to this mean here. And we did. Then it is implied that we will trade laterally as defined by the 1.25 standard deviation of that compressing band. So what happens? We trade laterally as defined by the band. So if we're seeing ourselves touch the bottom edge of the longest overexpanded distribution, you can predict that it will trade laterally as defined by that band. And lo and behold, that's exactly what's happening. Right? Because it would require an unrealistic amount of force to push price down out below the bottom edge of that band. It's so clean. It was a really clean chart. Yeah, a Catalyst chart says it's very hard to give a condensed explanation of our indicators. Yeah, you're 100% right. It's just all Bollinger Bands, though. There's nothing else on my chart but Bollinger Bands. Right? And I'm just picking pieces of the Bollinger Bands that I find useful. Here's what's really fun, guys. Percentile deviation is really not useful. And that's the number one use for Bollinger Bands, is to figure out percentile of deviation. Like, sure, entering the 3.2 standard deviation is useful, but there's a huge caveat because it doesn't account for mass, right? Like, look at this section right here where we tag the 3.2 standard deviation. That's considered a brick wall, right? If you tag it, you're going to get some rejection or some lateral training. But because there was very low volatility overhead and we were getting net expansion on the wave PM, where everything's expanding in the same direction, like, this is not a long signal because trend continuation is implied, because this is like pushing a rock down a hill from the top, right? This is a lot of potential energy all starting to roll in the same direction. So if you're using percentile deviation, the problem is those values change every candle close. BCH, BTC. Okay. Holy, I actually have a pretty big bag of this. This is half my portfolio right now. Like, look at this. You have all green periods. Like, it's literally giving us the green light. And then we're getting a CCI roll into trend continuation while there's a bullish there's a bullish condition on Bitcoin. So I actually entered right here last night on that CCI rollup, and by God, the profit ratio on this bad boy is insane. If you zoom out and you take a look at this, right, and you assume that trend continuation is likely, and that's a big assumption, mind you, right, because there's no volatility overhead. Any expansion is going to run. So I'm actually betting on potential energy and a good entry into it, which is not my typical trading strategy, I will admit. Right, because this actually has a much higher risk profile than actually betting into a trend, because I'm just betting on the fact that trend will occur, and we don't actually have implication of direction other than scalping the CCI rolls. Right, if you wanted to get short entries during a period of potential energy, you would take the CCI rolls down. And if you want longs during a period of potential energy, you take the CCI rolls up. So really, all I can do here is properly manage risk while entering into a scenario where trend is possible, but direction is not implied. So it's going to have a much lower probability than my typical trades, which is why I haven't called it. But the profit ratio on this is just insane. Oh, Great Day says smash that like if you want to make money. Honestly, you could just watch this and trade, and you can make money that way. But I would appreciate the viewer interaction, if you will. BNB. I'll do me. I should start typing out my thoughts here. Just really brief. Okay. This is going to just take me 1 minute. I'm just going to type these in. At the beginning of the video. I'm satisfied. Back to TA. No, I really like this chart. BCH looks really good right now. Litecoin bottom soon. Let's check. Let me get some water real quick. I'll do Litecoin and then I'll get water, okay? How does that sound? Yeah, I might call this. It's a clean chart. I might go for this, guys. I like it. The distributional subsets are on the move. You know, actually, yeah, I might do it, guys. I like it. Let's take a look at Litecoin. If you notice the strength, I'm not actually going to do that. I'm sorry. If you notice the strength of this trend, let's pop in the daily. See if we have any, nope, net expansion on the daily. Shit. We're gonna get a really good short entry here, okay? Yo, Jason Smith, I'll call it and call it high risk. How's that? We're gonna get a good short entry here pretty soon. All right, since again 3.2 standard deviation, red candle closes inside, do act as a strong brick wall and imply significant retracement. Just the problem is high price volatility at that pivot, right? Because typically there's distribution happening around those values where price is supported, and then, well, and then the dump happens, right? So people can shed their positions at extreme values. And it's important to note that the 3.2 standard deviation will be a lot less effective on cryptocurrency charts instead of Forex charts. Right, because there's higher liquidity in the Forex market. So those institutional benchmarks are much more respected, and it's going to be a lot harder to significantly push price beyond those institutional benchmarks. This is the 3.2 standard deviation is one of the only times where I'm actually going to consider using a static value to measure deviation. BCH. I already did BCH. I need to do okay, back to 4chan. Hooray. Who is this guy? What did he want me to do? He didn't even ask for a coin, he just called me lazy. Welcome to 4chan. VYST. Ooh, a bull flag. Okay. I want to tear into this bad boy. VYST. What a weird habit to type in Bitcoin into the end of every ticker. Oh, man. Whew. Wow, you rarely see a chart like this. I'm pointing out to literal zero values and the longer overexpanded periods. I want to see what that looks like. Let's load up. The 200 period is loaded up. Bizarre. Bizarro. Okay, you want me to tell you to buy into this bull flag. Let's go to a shorter time frame, okay? Okay, you like the upward break of the bull flag. I get it. I would be careful with that. Because the implied volatility overhead is really going to inhibit trend. I do believe you'll need further compression to actually make this a viable trade. However, okay, let's talk about some of the stake of a quad CCI strategy. Sure, okay. You're probably drawing your trend line here, right? But you're actually going to want it down here. Or rather, the pivot's going to be more down there, right? Because if you get the downward expansion of the 50 distribution inside of the 200, it implies mean reversion to the 200 mean, right? The expansion of distributional subsets toward their parent distribution center, that's what causes mean reversion, or trending mean reversion. So if you want to bet on this guy, I personally wouldn't trade it. But yeah, net expansion is not yet implied. You have volatility overhead. You can do it if you want, man, but the least I can do is give you a stop loss, okay? Right there, okay? If you re-enter the purple band and the 50 band starts expanding to the downside, it's going to be a problem. The profit ratio is there, but I don't find it all too high probability. Okay. Oh, BNB. I haven't done BNB yet. Hey, get more coins in there, guys. Ask me questions. I need to get that glass of water. Hold on. Excellent. TRX. Okay. I'll do BNB and then TRX, okay? How's that? Is that good mic position? You can hear me? I know this is a cardioid condenser microphone, so it's going to be... This might even be too close. Just let me know. Okay, I can give this recommendation. Parabolic moves end in similarly spectacular fashions. Let's time that up. It's not good to buy into this level of continued deviation. Watch them. Sir, do the needful. I need a quick pump to 4,200. I have a sick cow op. Here's a rather golden cow. If we get to 4,200, then the cow is revived. I buy golden Bitcoin chain, then talk to American girls online. Without pump and bull, then cow will die. There is no way we can dump here. Please, sir, do the needful. I understand your concern and will do my best to do the needful. Okay, here's the problem. We are still technically defined in downward expansion. Okay, we have upward trend on the 1 hour chart and downward trend on the daily chart, right? That conflicting information is what causes problems. However, if we actually do get upward expansion into the 240 band, there will be mean reversion, or 250, excuse me. That's exactly what you want to see. Nice. Ooh, a bitter comment. You're better at flipping burgers and shitcoins. Stick with that. TA is not for you. But thanks for the toilet paper. I want to click this. Okay. That's fine. Yeah, I defined the pivot. I didn't say it was going down. I just said, okay, didn't watch the video. Who cares? Let's go. I need to reply. Okay. I'm not saying it will go down. I'm saying it will go down if that pivot is crossed. Okay. That's all I wanted to do. God, I want sushi. Sushi sounds good. TRX, let's do it. Oh, we're looking for the short entry. It's happening. Actually, is it happening? What's your longest overexpanded period? Let's fucking do this. This is going to be good, my friends. This could be a huge trade. $120. I think we have now achieved the condition. Oh my God. Okay. So we're directly on top of the pivot for trend continuation. Right. As long as we're above this blue line right there, trend continuation is implied. As soon as we're inside that band, mean reversion is implied. Let's figure out how far down that mean reversion is. 28%. That looks nice. I'm gonna grab another protein shake. Hold on. Okay. God, that's so good. You know, let's actually define this on a shorter time frame so we can more accurately represent. This is the problem, though. Okay. No volatility overhead, implied upward and implied expansion to the downside. It's pretty risky. Okay. If we're seeing net expansion like this down here, and every CCI period is weighted to the same side, we tag the 3.2, and we're seeing that nice lateral move for the rejection. You know, if we see a CCI roll down, I would recommend short entry. All right, because it appears that pivot of mean reversion is going to be crossed over here on the daily. Okay, what period did we have? This is the 120, right? Okay. Let's do 480 on the 1 hour. No, that's not correct. Shit. 180 times 6, not 4. Or 120 times 6 is 720. Okay. It's the definition of trend. Man, oh man, we're just right on the pivot, and it's hard to know which way it's going to break. This is a really clean chart, and the profit ratios are there both ways. I'm getting the CCR on the 4 hour. Shoot. Really no good stop loss to use at the moment, though. Because on one hand, everybody's looking at this trend line, and they're waiting for the chance to get out of their position. I'm going to stay away from this for now. I'm going to keep a close eye on it. Right? It's a little bit too risky for my liking. I'll go ahead and do XLM now. You know, people keep asking me about this chart, and they all want to catch the bottom. But I'm going to go ahead and define that pivot for you and show you it's not a good idea. Okay. You do not want to take a long position on this chart until we re-enter the 300 band. Simple as that. Yep, that's all I have to say on this chart, right? We're still technically in a state of defined trend. If we cross the mean reversion pivot, sure, take the long, but until then, it's not a good idea. See if there's any last comments I need to answer over here. I almost want to follow that link. It's not my link, but I want to follow it. Somebody type that link in. I want to know what it is. I just like opened up a virtual box and plug that in and see what happens. I'm out of coins to do. Oh, BSV. BCH BSV. Right, I can do that. Oh, never mind. Christ. Is there a chart with more history I can do? Finex maybe? No, that's what I just checked. Okay, never mind. Right. Oh, I'm so stupid. It's because it was a hard fork. It all came out at the same time. I mean, when you have a downtrend like this, and you get lower lows and lower highs, if we want to define the channel, we can do that. Let's get a pitchfork out. I'm not the biggest advocate of pitchforks anymore, but they can be useful. And we're going to need to use an inside pitchfork from the looks of it. I'll give it a try. We have a few ways we could draw this. Let's think about this. Yeah, I'm thinking it's a shift pitchfork. Let's try this out. Swing high, to swing low, to swing high. No. Ugh, not that static trend lines would tell us much on this anyway. Yeah, if we just get a trend line with 3 points of contact, maybe we can recommend buying pressure on that. But if we take a look at something like ZRX recently, static trend lines don't do shit. Yeah, okay, I'm going to draw this one out for you folks. All right, we have a trend line here with God knows how many points of contact. All right, just because you're buying on the bottom edge of the trend line doesn't mean good things are going to happen. Look how many points of contact we have here. 1, 2, 3, 4, 5, and then we have a downward break and a retest from below. Like, sometimes, guys, you just want to stay away from a downtrend. I mean, maybe if you look at a more macro level scenario on this guy. BSV, where's that guy? Here he is? Yeah. Generally, if you're in a bear market, you stay away from trying to take longs on downtrends. And then we'll add a caveat. If a mean reversion pivot has not been crossed. Right, because that's the one exception. Then we'll do RLC row here. Hey, this is actually pretty nice. We might be able to get something good here. Oh, shit. I like this chart. It's already 300 period. Ooh. Okay. Technically, trend is no longer defined. I hate to say it. That's what it's looking like, guys. Okay, I mean that's where the analysis has to stop, right? If mean reversion is implied, I can't give the good news that it's going to continue. Yeah, I mean that's that, guys. Mean reversion pivots crossed. Unless it's the 350 period. 1 second. Maybe I'm not looking at this at the right resolution. Shit. Okay. Yeah, that changes things. I need to load up. To actually get a good look at this, I need to change something. $368. And we'll post this chart for him. Actually, let's change this to 368 just so we can define the trend, okay? 368. Yeah. Will this imply stop below local lows? And then highs, well, let's just assume 15%, okay? That's a great chart. I'm glad you had me look at it. really a perfect definition of trend. We're directly on top of the pivot for trend or mean reversion. The downward break will take us to the 368 MA. If, as long as we stay above that pivot, trend is defined quite cleanly. And there's one last thing I need to do here. Okay. Perfect. I thought that was funny. Okay, let me check the YouTube comments, see what you guys want of me. USD CAD. Yeah, I'll do that. Christ, I've been streaming for over an hour. I'm doing pretty good today. Okay, macro to micro. Let's do this. You know, I'm actually going to make an adjustment to my chart template right here. There's one thing I want to change. I want to generate a mean reversion band. That's offensive. Let's try pink. It's really hard to get this to a manageable value. I just really want a band that will define me. Oh, wait, hold on. I don't know. After I get like the fourth Bollinger Band on this chart, it gets a little bit hard to see. I don't know if I have a good answer for this. Okay, orange. Okay, and then we're just going to keep this actually invisible when we're not using it, and then we'll just pop it open, or rather use these interchangeably. And now I realize how atrocious that color is. 1 second. I can make use of that. Perfect. James Collins says, how do you account for volume? VYST is a penny stock with like $10 in volume a day. LMAO. Yeah, that's why I didn't really recommend buying into a fucking painted bull flag on a penny stock, right? I guess TA isn't for me. dumbass charlatan. You mean chart? Litten? Ooh! I love it. What fun. I'm having so much fun. How do you account for volume? Yeah, dude, you don't account for volume on a penny stock. All the price action down there is painted. You don't want to fuck with that. More downside to XLM? I didn't say that. I just said that XLM is technically in a state of trend. Right, the state of trend doesn't imply further downward moves. If we move sideways, the downward trend will be over. Just, it's questionable. Kara says, when to take a position on a bounce. Kara says, a bounce off the longest over expanded period that defines the trend. Thank you. Yeah, CCI roll will usually do the trick. Beautiful. I love this thread. What a productive thread. I'm having fun. I didn't do USD CAD yet. Okay. I'm going to clean up this chart a bit. Okay. And then I'm going to load up one more indicator on this bad boy. Public library, or my invites. And yes, I can technically have the 350 Bollinger Band listed into Bollinger Band Meomics, but for the mean reversion MA, or rather for the Bollinger Band I'm using for mean reversions, I want it to load instantly. And while the convenience of Bollinger Band Meomics is nice, for a value that I constantly change, I would prefer to have something faster loading. Okay, USD CAD. Let's start from the top down, friends. We are directly on top of the weekly 200 and weekly 50. And that is providing some excellent support from the looks of it. This could actually be the beginning of a defined trend. How attractive. Here we are. Oh, how much you bet the longest over expanded period is 100? That's 90. God damn. I have to change that habit. Lateral trading is defined by the 90 period. Okay, so as soon as this 90 band is defined below the 0.7 value, which means that this will compress, any kind of new upward expansion I would believe to be in the upward direction. Okay? And I need one more indicator on this weekly MAs anywhere. Boom. Look how clean that bounce is, right on that institutional benchmark right there. God damn. Really, you guys need to use higher time frame MAs on lower time frames because they are just so well respected, especially in Forex. I should clarify that. Okay, we need to look at the 1 hour chart to define this new upward expansion of trend. Just give me 1 second. It appears after the first hour and a half, viewership does get a little bit lower than, I don't know, at the beginning of the stream. So might call this one quits soon. 110. Okay, implied mean reversion on this chart, guys. If you want to take a short entry on the top edge of that band on the CCI roll down, it's going to be really clean, okay? We finally have a good position to take here. Yes, we did just see the month, or the bounce on the monthly level chart, weekly, excuse me. However, now because this pivot was crossed, it is implied will revert down to its relative mean. I do not like that color. I'm sorry I'm so picky. My charts need to be aesthetic as they are accurate. Here we are. Finally. I don't know why I relied on default colors. I'm so stupid. Okay. Right, CCI rollout is going to be really high probability short entry. I'll draw it out for you guys. Might call this. I'm going to call this. There, right there. Okay. Also, I have a complaint. I right-click on the price scale, and it no longer lets me snap on the left side. Does anyone know how to fix that? I think they updated TradingView, and I don't like what they did. For the sake of sanity, I'm actually going to define the stop loss as a range, right? Because we're going to expect high price volatility as soon as it breaks. Have I done Ethereum yet? I have not. Let me just make a TradingView ID out of this USD CAD call. And I'm going to leave this chart open because it's really clean. Okay, this is what I don't like. I need my price on the left side there. Okay, that's my solution for now. Not the way to fix it, but at least now I can see the prices I'm typing in. Yeah, we're just going to copy my template. Time to make a nice 4x call. And yeah, I guess you guys get to look at it. Boo-hoo. Short entry. It's going to be from $1.32717 to 1.32944. No stop loss range from 1.33098 to 1.33326. $1.32077 to 1.3103. We do need to include a important note for the take profit targets. You will be better off taking as the 110, 1.25 standard deviation, and the 110 mean. 1 to 3 days, that's perfect. Risk level, I'd say medium. And then call strength is going to be strong. For the stop loss, do note that the slope, the top edge of the band is up. So be aware that retests of that pivot are completely healthy, even if that value is continuously getting higher. Short. Okay, I made a trading view idea. And I'll actually publish that onto the website as soon as I'm done. Nice. Thank you for your patience. Although I don't know why I'm thanking you for your patience when I just gave you a free call. Okay. USD CAD's nice. Someone want me to check Ethereum? Oh, Litecoin. Yeah, I'll do Litecoin. Actually, no, I owe somebody. I deserve that guy a beautiful trading view idea. All right, if you guys haven't read this idea, Holy Grail Trading Advanced Volatility Theory, this, if you read this, it will make a little bit more sense, okay? It's a pretty long article I've written. However, it actually goes in depth of what I'm doing here. Strongly recommend you read this. I strongly recommend you read this right up for a basic understanding of the vocabulary I am using. If you would like more resources, I'd be happy to send you the PDFs for Mark Whistler's macro to micro and volatility illuminated if you DM me. Okay, I need to do Ethereum. Shit, I just posted that idea as a double chart, did I? Oh, fuck. That's a nuisance. I should probably republish it as a single chart idea. Hold on. Oh, I didn't. Okay, never mind. That's very nice. Okay, I'm trying to do Ethereum USD. Or Ethereum BTC, excuse me. From the looks of it, we need to look at the 240, 220. Yep, trend is defined. It's nice. Upward trend is defined. And then I actually want to check on a more macro level time frame here, just in case. Yep. Any position you try to enter down there will have a very good risk management strat. If you re-enter that band, you can change your position to a short. Nice. A car. That's not a car. Very nice. Back to the comments. Can I not do it on both? Are you kidding me? They removed it? I can't have it on both sides. What kind of nonsense is that? Okay. Well, this was fun, folks. We are down to 10 viewers. It has been almost 2 hours. I've had a fun time. I'm going to say that's it. It has been a pleasure, my friends. I will see you all later.
face of all the problems in the world, impotent, and why I somehow cannot manage to transform I. Now here we get to the real problem, because we're always telling each other that we should be different. Now, I'm not going to tell you that tonight. Why not? Because I know you can't. Nor can I. That may sound depressing, but I'll tell you it isn't. It's very hard. But everybody, you see, who is at all sensitive and awake to their own problems and human problems is trying to change himself. We know we can't change the world unless we change ourselves. So when we are aware of the ego I, we are aware of this chronic tension inside ourselves. And that's not us. It's a futile tension. So when we get the illusion, the image of ourselves, married to a futile tension, you've got an illusion.